Let me tell you something that most people will scroll right past. And that's fine, because what I'm about to share isn't for everyone. It never is. I've been in the money game for decades. I've sat across the table from billionaires, hedge fund managers, central bankers, and some of the sharpest commodity traders on the planet. And right now, there's a conversation happening in those rooms that is not making it to your news feed. It's about silver. And if you're not paying attention to silver in this environment, you're leaving one of the most asymmetric opportunities of this decade sitting on the table. So here's my question for you, and I genuinely want you to answer this in the comments below. Do you own any silver right now? Physical silver, ETFs, mining stocks, anything. Tell me what you've got, or tell me why you haven't pulled the trigger. Because your answer is going to reveal something very important about how you think about wealth. Now let's get into it. I'm not a speculator. People misunderstand me on this. They see Shark Tank, they see the deals, they see the drama, and they think I'm chasing moonshots. I'm not. I'm a disciplined capital allocator. Every dollar that leaves my portfolio has a job, and right now, silver has earned a seat at my table. Here's why. Silver is not gold's little brother. That's the first thing you need to get out of your head. Gold gets the headlines. Gold gets the central bank buying. Gold gets the fear trade. But silver? Silver has something gold will never have, industrial demand. And in the world we're building right now, that matters more than almost anything else. Think about what's happening. The global push toward electrification is not slowing down. Electric vehicles, solar panels, 5G infrastructure, AI server farms, every single one of these technologies requires silver. Not a little silver, a lot of silver. A single electric vehicle uses roughly twice the silver of a traditional internal combustion engine. A solar panel, between 10 and 15 grams of silver per panel. And we're not talking about building a few solar farms. We're talking about governments around the world committing to energy transitions that will require hundreds of millions of panels over the next decade. So let me be very direct with you. Silver demand is being pulled from two directions simultaneously. You've got the financial demand, the store of value trade, the inflation hedge, the anti-dollar sentiment, and you've got industrial demand accelerating at a pace most analysts are not pricing in correctly. That is a supply squeeze in slow motion. And slow motion squeezes are the ones that make serious money for people who position early. Now here's where the math gets interesting. And I love math because math doesn't lie to you. Politicians lie to you. Salespeople lie to you. Your brother-in-law lies to you. Math does not. The gold to silver ratio right now is historically extreme. For most of modern financial history, an ounce of gold bought you somewhere between 40 and 60 ounces of silver. That was the normal range. Today that ratio is sitting well above 80. In some recent periods, it's pushed close to 90. What that tells me, what that tells any rational investor who studies monetary history, is that silver is deeply undervalued relative to gold. And markets have a way of correcting imbalances. Not always on your timeline, not always gently, but they correct. If gold holds anywhere near current levels and that ratio compresses back to even 60, you're looking at a silver price that would need to be dramatically higher than where it sits today. Some serious analysts, not permabulls, not gold bugs, not people trying to sell you coins in a late-night infomercial, are putting $100 silver on the table as a realistic scenario, not tomorrow, not next week, but within a time frame that should make every serious investor stop and think. And here's what bothers me about the average person's relationship with silver. They hear $100 and they think speculation, they think lottery ticket, they think gamble. That's a middle-class mindset, and I mean that with zero condescension. I mean it as a diagnosis, because wealthy people don't look at asymmetric opportunities and think gamble. They look at downside, they look at upside, they look at the macro environment, and they size their position accordingly. That's it. That's the whole difference. Let me contrast two people for you. Person A hears about silver, thinks it sounds interesting, does nothing, waits for more certainty, waits for the mainstream media to validate the trade. By the time CNBC is running silver segments every day, by the time your coworkers are talking about it at lunch, the move is already over. That's how it always works. Always. Person B hears about silver, does their research, understands the industrial thesis, understands the monetary thesis, looks at the supply constraints. Because here's something most people don't know: primary silver mines, mines where silver is the main product, produce only about 25 to 30% of global silver supply. The rest comes as a byproduct of mining other metals. That means you can't just ramp up silver production quickly in response to higher prices. The supply response is slow and complicated. Person B understands this. Person B takes a position, not their entire net worth, a calculated, disciplined allocation, and then person B waits. That's the game. Patience combined with conviction. Conviction that comes not from hope, but from analysis. Now I want to talk about something that most YouTube channels won't touch because it's uncomfortable. Inflation. Not the official inflation number that governments publish. The real inflation that you feel when you buy groceries, when you pay your rent, when you look at your insurance premiums. That gap between what they tell you inflation is and what you actually experience is not an accident, and it's not going away. Every major central bank on earth has expanded its balance sheet at a pace that would have been considered insane 15 years ago. The Federal Reserve, the European Central Bank, the Bank of Japan, they've created money at a scale that has no historical precedent in peacetime. And that money has to land somewhere. It lands in asset prices. It lands in real estate. It lands in equities. And eventually, inevitably, it lands in hard assets, in gold, in silver, in things that cannot be printed. This isn't conspiracy theory. This is basic monetary economics. When the supply of something increases dramatically and the demand for it stays relatively stable, its value per unit goes down. That's true for widgets. That's true for currency. So what does the rational person do? They exchange depreciating currency for assets that maintain purchasing power over time. Silver has done that job for literally thousands of years. Not every year, not without volatility, but across generations, across empires, across every currency collapse in recorded history, silver has held value, and I want you to think about that for a moment. We live in an era where people speculate on digital tokens, on meme stocks, on things with no underlying value, no industrial utility, no monetary history. And yet somehow putting a portion of your portfolio into silver, one of the most battle-tested stores of value in human civilization, that seems exotic to people. That's backwards. Let me give you the supply picture because this is the part of the silver story that is genuinely underappreciated. Global silver demand has outstripped mine supply for several consecutive years. The Silver Institute, which tracks this data rigorously, has documented structural deficits, not hypothetical deficits, real deficits, supply shortfalls that are being met by drawing down above-ground inventories. And above-ground inventories are not infinite. When you consistently consume more than you produce, eventually you feel it. Now add to that the fact that exploration spending in the mining sector has been chronically underfunded for years. Junior miners couldn't get financing. Major miners were returning capital to shareholders instead of building new projects. New silver mines take 7 to 10 years from discovery to production, even in favorable regulatory environments. The pipeline of new supply is thin, and demand from the green energy sector is just getting started. I'm telling you, the setup here is unusual. I've seen a lot of commodity cycles in my career. I've seen oil go to $145 and back to $30. I've seen gold go from $250 to $1,900. I know what a structural supply-demand imbalance looks like when it's in the early stages. And I know that the people who make the serious money are not the ones who buy after the move. They're the ones who understand the thesis before it becomes consensus. So what do you do with this information? Here's my framework, and you can adapt it to your own situation. First, do not make silver your entire portfolio. Anyone who tells you to go all in on any single asset class, silver, gold, crypto, anything, is either reckless or selling you something. Diversification is not weakness. It's how serious money survives. Second, think about your entry point and your vehicle. Physical silver, coins, bars, gives you direct exposure with no counterparty risk. You own the metal. Silver ETFs give you liquidity and ease of access. Silver mining stocks give you leverage to the silver price, meaning when silver moves up significantly, well-run miners can move up even more. But they also carry company-specific risk, management risk, geopolitical risk depending on where they operate. Know what you're buying and why. Third, set your thesis before you invest, not after. Your thesis is industrial demand is structurally growing, monetary demand is supported by macro conditions, supply is constrained, and the gold to silver ratio is historically stretched. If those conditions change materially, reassess. But if they don't, hold your position through the noise, because there will be noise. Silver is volatile. It will drop, and it will spike, and it will test your conviction. That's the price of entry for asymmetric returns. And fourth, and this is the one most people skip, Size your position to match your conviction and your risk tolerance, not what you see someone else doing, not what sounds impressive. What makes sense for your financial picture? Because the best investment strategy in the world is the one you can actually execute without panic selling at the bottom. Here's the thing about silver that I keep coming back to. It exists at the intersection of two of the most powerful macro trends of this decade, the energy transition and the monetary debasement cycle. Both of those trends are real. Both of them are accelerating, and silver is one of the very few assets that benefits directly from both simultaneously. That is rare. That kind of confluence doesn't come around every year. I built my wealth by seeing things before they become obvious, not by being reckless, not by gambling, by doing the work, understanding the fundamentals, and having the discipline to act when others are still skeptical. Silver right now reminds me of other moments I've seen in markets. Not identical, because no two moments are identical, but structurally similar. Early enough that most people are still dismissive. Late enough that the thesis is well supported by data. The people who will look back on this period in 5 years, they'll fall into two camps. The ones who saw it coming and positioned accordingly, and the ones who knew about it, nodded their heads, and then did nothing. Don't be the second group. I want you to ask yourself something honest, not something comfortable, something honest. What is your current strategy for protecting and growing your purchasing power in an environment of currency debasement, rising commodity demand, and structural supply constraints? If your answer is a savings account, you're losing money in real terms every single day. If your answer is purely equities, you're correlated to the same macro risks you're trying to hedge. Hard assets, silver among them, deserve a serious look. So drop your answer in the comments. Own silver? Tell me your thesis. Don't own it? Tell me your objection. I read these, and if enough of you have strong objections, I'll address them directly in a follow-up. Because this conversation, the real conversation about where money goes in the next 5 years, is one that most people are not having. I am, and if you're still watching at this point, you are too. Pay attention to silver. The market eventually rewards those who do their homework before the crowd catches on. And when silver catches on, when it finally gets its moment in the headlines, I want you to already be positioned. Not chasing, not watching, already there. That's how wealth works. Not luck, not timing the perfect bottom. Conviction, discipline, and patience. Now go do your homework.